All right, everybody. Welcome back. Ready to take a deep dive into the steel industry.
Sounds good.
Yeah, we're going to be looking specifically at Tata Steel's performance in Q3 of their fiscal year 2025. And the global steel industry has been in the news a lot lately. There's a lot going on. So we thought it would be interesting to take a closer look. And we've got two really interesting sources here. We have the transcript from Tata Steel's earnings call with analysts, and then we also have their pretty detailed financial report. So we're going to try to figure out how Tata Steel is handling all of these global challenges, especially in Europe. They seem to be facing some of the biggest hurdles there. But before we jump into all of that, we need to sort of understand the big picture. So to help me make sense of all this, I've got an expert here with me. Can you kind of give us an overview of what the global steel market looks like right now?
Well, prices are down globally. It's
Yeah.
kind of like what we saw back in 2015, 2016.
Okay. So what's causing this downward trend? Why are prices down?
Well, China's been exporting a record amount of steel, over 110 million tons, and they're doing it at really low prices.
Yeah.
So that's putting pressure on prices everywhere else.
Okay, so it's kind of like a ripple effect starting from China. And how are other countries reacting to this kind of flood of cheap steel coming from China?
Well, a lot of countries are turning to trade measures like tariffs
Okay.
to protect their own domestic steel industries.
So everyone's trying to protect their own
Right.
and kind of play this global game of steel chess.
Exactly.
Okay, and then on top of that, we've got these global economic slowdowns happening right now, which I imagine is leading to less demand for steel. And then there's this whole push for decarbonization, which is
Yeah.
probably really expensive for these companies to implement. So with all of that going on, how is Tata Steel actually doing? Are they managing to survive in this crazy environment?
Yeah, it's really interesting. They're actually reporting some pretty positive results despite all of these challenges.
Okay, so they're not just surviving, they're actually thriving.
Yeah, it seems like it.
Wow, okay.
Yeah.
I'm intrigued. What's their secret sauce? What are they doing that's working so well?
Well, they've been working on a number of strategic initiatives, and their consolidated revenue is strong. But the really impressive thing is that their EBITDA per ton, that's earnings before interest, taxes, depreciation, and amortization, has actually increased by 30%
30%.
compared to the previous quarter.
Wow, okay. That's huge.
Yeah.
What's driving that kind of growth? I mean, is it just cost cutting?
Cost cutting is definitely a big part of it. They've been really focusing on efficiency measures across all of their operations,
Hmm.
but they're also, shifting towards producing more specialized, higher value products.
Oh, so they're not just making any old steel. They're kind of being more strategic about the types of steel that they produce.
Exactly.
Okay, very interesting. And I know they have a really big presence in India.
Yeah.
So let's zero in on that for a second. What's been working for them in India specifically?
So they commissioned a new blast furnace in Kalinagar,
Okay.
and that's really helped boost their crude steel production. It's up by 6% year over year.
Okay, so that's a pretty significant jump. And what's their strategy for the Indian market?
Well, they're really focused on catering to the growing construction sector there, and they're doing that through a few key ways. They have Tata Tiscon, which is their retail brand for individual home builders,
Okay.
and they've been seeing record sales with that.
Okay.
They also have an e-commerce platform called Ashana, which is designed specifically for individual home builders. And they have a network of construction service centers all over India.
So it's like they're really trying to build an ecosystem around
Exactly.
providing steel to individual home builders.
Yes.
Okay. That's really interesting. So it sounds like they're doing really well in India. But I know from looking at their financial report that there are some potential challenges coming up, specifically with those iron ore leases. Can you tell me a little bit more about that?
Yeah, even with all these plans to increase their capacity in India, they're facing this challenge of iron ore leases expiring in 2030.
Okay.
And that's, iron ore is the main ingredient in steelmaking.
Yeah, absolutely crucial. So what are they doing to prepare for that?
Well, they are, exploring lots of different sourcing strategies
Right.
to make sure that they have a steady supply of iron ore.
So they're already thinking ahead,
Yes.
which is a good sign. Okay, so we've talked about the global market. We've talked about India. Now let's switch gears a bit and talk about Europe, which seems to be where Tata Steel is facing some of its biggest challenges. So we'll dig into that when we come back. Join us for part 2 as we continue to explore Tata Steel's journey through the global steel industry. Okay, so we've talked about how China is really sort of shaking things up in the global steel market and how Tata Steel is doing really well in India. But now let's turn our attention over to Europe, which seems to be a much more complicated situation for them.
Yeah, Europe's been a tough market for Tata Steel.
Yeah. What's the situation like over there? Are they facing the same kind of issues they are in India?
Not exactly. We talked about how those global steel prices are down.
Right.
Well, that's hitting their European operations pretty hard.
Okay. And are there other factors at play in Europe as well?
Yeah,
Yeah.
definitely. So let's start by looking at the Netherlands.
Okay.
Their situation there is kind of like a perfect storm.
What do you mean?
Well, the spread between raw material costs and steel prices has really shrunk to multi-year lows.
Okay. So it's like they're getting squeezed from both sides.
Exactly. It's like the cost of ingredients for making steel is going up,
Right.
but the price they can get for that steel is going down.
So it's like you're running a lemonade stand and lemons are getting more expensive,
Exactly.
but people are only willing to pay less for your lemonade.
You got it.
Oof, that's a tough spot to be in. And is that the only problem they're facing in the Netherlands?
No, unfortunately, they're also dealing with higher costs for something called emission rights.
Emission rights. What are those?
Basically, these are permits that companies have to buy in order to emit carbon dioxide.
Okay.
It's part of the European Union's emissions trading system.
Okay, interesting. And how is that impacting Tata Steel?
Well, their production was lower in the Netherlands in previous years,
Okay.
which means they have fewer of these permits now,
Oh, I see.
and that's making it more expensive for them to produce steel.
Wow. So it's like they're getting penalized for producing less in the past?
Kinda? Yeah.
That seems a little counterproductive.
It definitely highlights the challenges that companies face when they're trying to, balance environmental responsibility with staying profitable.
Yeah, absolutely. So they're getting squeezed on both sides, lower steel prices and these higher production costs. How are they responding to this? What are they doing to try to get out of this tough spot?
Well, they're not just sitting around waiting for things to get better.
Okay.
They're really actively trying to cut costs and improve efficiency.
Okay, in what ways?
Well, they're looking at, reducing personnel costs,
Okay.
optimizing maintenance expenses,
Mhm.
and they're also exploring different combinations of raw materials to try to bring those input costs down.
So they're tightening their belts and getting creative. Okay, so they're doing all of that in the Netherlands. But then over in the UK, they've made a really kind of bold decision.
They have. It's, some might even say it's a controversial decision.
Okay, I'm intrigued. Tell me more.
They've decided to shut down what they call their heavy-end assets,
Okay.
which is essentially the equipment that they use to make raw steel from scratch.
Okay.
And they're actually sourcing steel now from other places to service their UK customers.
Wait, so they're importing steel into a country where they have steel plants?
I know it sounds a little counterintuitive.
Yeah, like McDonald's importing burgers?
Exactly. But there's a method to their madness.
Okay.
By shutting down those heavy-end operations, they've drastically reduced their fixed costs.
Oh, so they're trading those higher material costs for lower fixed costs.
Exactly.
Okay, but does that really make a difference?
A huge difference. Their fixed costs per ton of steel delivered actually decreased by over 80 pounds in the third quarter alone.
Wow. Okay. That's a significant chunk of change. But isn't that kind of risky? What if they can't get a steady supply of steel from elsewhere?
Yeah, it is a calculated risk, but it also allows them to be a lot more flexible
Okay.
and potentially work with suppliers who have a lower carbon footprint.
Oh, so there's a sustainability angle to this as well.
Exactly. It kind of aligns really well with the UK government's focus on decarbonization.
So they're turning a challenge into an opportunity.
That's one way to look at it.
Yeah.
Now, their UK operations are still, experiencing losses.
Okay.
But this strategic shift is putting them on a path towards profitability.
So they're making tough choices, but it seems like they're considering all of the angles. All right, now let's dig a little bit deeper into some of the financial details here, because both the earnings call and the financial report talk a lot about cash flow. Can you help me understand why that is so important?
Sure. So cash flow is really the lifeblood of any business.
Okay.
It's the money that's actually coming in and going out. And Tata Steel has been really focusing on something called working capital management,
Okay.
which essentially means that they're trying to make sure that they have enough cash on hand to run the business smoothly.
So it's not just about making a profit on paper. It's about having the actual cash to pay your employees and invest in new projects and weather any storms that might come up.
Exactly.
Okay.
And they've been really proactive about this, and it's been paying off.
How so?
Well, they've released over 4,000 crores in working capital just this quarter.
Wow. Okay, that's a lot of rupees.
Mm-hmm.
And We were talking about the Netherlands being in such a tough spot,
Right.
but they actually generated positive cash flow in the third quarter.
Yeah, despite everything that's going on there.
That's really impressive.
It is.
It shows that even though they're facing these challenges, they're still finding ways to keep that cash flowing.
Exactly.
Okay. And I also noticed in their financial report that they were able to write back a significant liability
Yes.
related to some past claims. And that really gave their financial position a boost. A nice little bonus.
Right. It's like finding some extra cash tucked away in a drawer.
Exactly.
And then on top of all of that, they're also really committed to keeping their debt under control. They're aiming to bring their debt-to-equity ratio, which is basically a measure of how much debt they have compared to their assets,
Right.
below 3.
Yeah, that's a pretty common target for a lot of companies.
Okay.
It shows that they're serious about maintaining a healthy financial foundation.
So we've talked a lot about the financial side of things, but we can't forget about sustainability, which is something that Tata Steel has been really vocal about.
Yeah, they're really trying to position themselves as a leader in this space.
Okay. And what are some of the concrete steps they're taking to make that happen?
Well, we talked about some of the things they're doing in the UK.
Right.
But one of the most interesting things is that they became the first steel maker to use biochar in a blast furnace.
Biochar. I'm not familiar with that. What is that?
So it's basically this charcoal-like material that's made from plant matter.
And it can be used as a more sustainable alternative to traditional fossil fuels in steelmaking.
So they're turning waste into a valuable resource.
Exactly.
Very cool.
And, it's a really big step towards reducing their carbon footprint.
And are there other things they're doing on the sustainability front?
Yeah, they're working on reducing emissions across all of their locations.
Okay.
And they've been recognized for creating a more diverse and inclusive workplace.
Okay, how so?
Like, they have an all-women shift at one of their mines in India.
Oh, wow. That's amazing. So they're really thinking holistically about sustainability. It's not just about the environment. It's about social responsibility as well. Okay, so we've covered a lot of ground here. We've talked about the challenges they're facing, the opportunities that are out there, some of the really interesting strategic decisions that they've made. But the steel industry is facing some massive changes right now. There's this push for decarbonization. There's global economic uncertainty. Technological advancements are happening all the time. It's a lot to handle. So what does all of this mean for Tata Steel going forward?
Well, Tata Steel is really at a crossroads.
At crossroads. In what sense?
Well, they could go in a couple different directions. It really depends on how well they navigate all of these challenges and opportunities.
Okay, so let's go challenges first.
Yeah.
What are some of the biggest hurdles that Tata Steel has to overcome in the next few years?
Well, the big one is just that unpredictable global economy.
Yeah.
Things are still shaky in China. There's the ongoing war in Ukraine. Lots of countries are battling inflation. And all of that could lead to a significant decrease in the demand for steel.
And especially in Europe, where we were just talking about how they're already dealing with those tight margins.
Exactly. Any kind of slowdown in demand could really hurt them there.
Yeah, that makes sense. So if demand does slow down, what can they do? How can they mitigate that?
Well, they're going to have to stay really laser focused on keeping costs down, making their production as efficient as possible. They might even have to consider restructuring their European operations even further if things get really bad.
Okay, so there's the demand side of things, but then there's also that issue of the iron ore leases expiring in India in a few years.
Right.
If they want to keep growing in that market, they've got to figure out a way to get a reliable source of iron ore.
Yeah, it's a big one.
Yeah.
They're going to have to get creative with their sourcing strategies, maybe look at partnerships or acquisitions, really anything they can do to lock in those essential raw materials.
So those are some of the external challenges. But what about internally? Are there any areas where Tata Steel really needs to improve or step up their game?
Well, one thing that stands out is their debt level. They've made some progress in paying it down, but their debt-to-equity ratio is still pretty high compared to some of their competitors.
Right. And with interest rates going up, that debt's only going to get more expensive to carry.
Exactly. And that could really limit their options.
Absolutely. So they're going to need to prioritize paying down that debt, even if it means putting some of their more ambitious growth plans on hold for a bit.
Yeah, tough choices.
Okay, so we've talked about the doom and gloom. What about the flip side? What opportunities are out there for Tata Steel to really excel and capitalize on?
Well, one of their biggest strengths is their commitment to sustainability.
Yeah.
As the world is increasingly focused on decarbonization, Tata Steel is really well positioned to become a leader in green steel production.
especially with those investments they've been making in biochar technology.
Right, and their efforts to decarbonize their operations in the Netherlands.
So they've got some serious green credentials.
They do, and I think that's going to attract customers and investors who are looking for companies that are taking sustainability seriously.
Yeah, absolutely. And then let's not forget that they have this incredible opportunity to tap into the growing demand for steel in India.
Right. If they can handle those iron or lease expirations and keep their operations running smoothly, they could see massive growth in that market.
So they've got this really interesting position. They've got a strong foothold in a developing market and a forward-thinking approach to sustainability in more developed markets.
Exactly. It's a good combination.
And then there are all those innovative products and solutions they've been developing, like their e-commerce platform and those construction service centers.
Right. Those are going to give them a competitive edge for sure.
It's like they're not just selling steel, they're selling expertise and tailored solutions.
And that's smart.
So it seems like a mixed bag for Tata Steel right now. A lot of challenges, but also a lot of potential.
Yeah, it's like they're walking a tightrope.
But they're doing it with a mix of ambition and caution.
They're not afraid to make bold decisions,
They're investing strategically.
and they're constantly looking for ways to improve.
So, after all of this, what's the big takeaway for our listeners? What should they be paying attention to as Tata Steel's story continues to unfold?
I think the biggest takeaway is that Tata Steel is at a pivotal moment.
Yeah.
Their success hinges on their ability to execute their plans,
Yeah.
navigate the global economic ups and downs,
Yeah.
and really grab hold of those opportunities that are being created by this shift towards a more sustainable and tech-driven future.
So pay attention to how they're handling those raw material challenges in India, whether they can get their debt under control and their progress on decarbonization.
Right. And don't forget about the innovation piece. Tata Steel is constantly experimenting with new things, and they could really end up reshaping the industry as a result.
It's really a great reminder that even in a well-established industry like steel, there's always room for change and disruption and reinvention.
And for those who are willing to embrace that change, the future is wide open.
Well, folks, that brings our deep dive into Tata Steel to a close. We hope you've enjoyed exploring their journey with us and that you've come away with a better understanding of this dynamic and ever-evolving industry. As always, we encourage you to keep learning, keep exploring, and keep diving deep.